There is a right and correct way as a trader for you to incorporate your indicator window such as stochastics, oscillator, relative strength index, commodity channel index, even as well as the MACD in order for you to have a high probability trade. This has nothing to do with the application of saying that when price is at the 20 to 10 region is an oversold, or when price is at the level of 90 and 80 region it is an overbought. Now that is a wrong way to apply the indicator. If that is the wrong way, then what is the right way? In this video, I'll be showing you the mistake that most people did and how exactly you can take advantage of this to combine your trendline strategy as well as your commodity channel indicator in having a high probability trade. So, let me run you briefly through the setting of this indicator, which is the relative strength index. The period is 9. You apply to close. These are the levels 90, 80, 50, 10, and 20. Then here you change the color. The style, you change the color to that of your background. That's because we don't want that indicator to reflect. Then you have your commodity channel index. The period is 14. You apply to typical price, high, low, close, and then these are the level and the color is black. So once you are done with that perfectly well, your chart will be looking like this. So now, without wasting much time, what is the mistake that most people do? Most traders assumed that when price is at the level of 10 and 20, you were told that that means it is an oversold zone, and as such, you should buy. Now, in this scenario, they bought. You can buy and it plays out. But there are other instances. For instance, let me show you this. A typical scenario is what happens here. For instance, in this market scenario now, look at it. Price is at the overbought here, right? This is an overbought zone, that is the high. And then what you are being told is that once price is an overbought, you should sell. Now look at what happened here.
Based on what you were told before. Now when price is at the level of 80, 90, you should sell. But look at this, price is at the 80, 90. So if you had sell, you realize that based on what the indicator window is telling you, price is still buying, which means you should have been wrong. It could have been a lost trade on your part. If that is the case, what then can you do about it? What is the right way for you to go about this trading? What is the right application of this? Remember, this is an uptrend. So what do? We pick our trend line and mark it in a correct order. So pick our trend line like this, and then we have our trend line connected beautifully well, right? So what do we do in this scenario? How do we trade it? In this scenario, it means that you are trading in the direction of the trend. So you are not looking for any pullback or any overbought or oversold zone. So what will you see? Price is retesting the trend line, and at the same time, price is coming for the level of 20 and 10 of your relative strength index. So what this shows to us is that what we are seeing here is a retracement, because since this is the direction of the trend, this pullback serves as a retracement. So it means that this is a retracement. So when we get this confirmation, it shows that we have come to the end of the pullback, and then we now buy, getting a candlestick confirmation from here. And of course, here is a bullish engulfing candle. So going with that bullish engulfing candle, just a moment, you can see this is a bullish engulfing candle, and going with that bullish engulfing candle, we are into that buy trade. So that is exactly this can be taken care of. Alright, so sorry for the background noise. Let's proceed. So in this scenario, you realize that price pulled back and gave us a bullish engulfing candle. And then the indicator window, which is now the CCI, gave us this confirmation. So this is valid. The reason you saw price but was because this is the original direction of the trend. So price eventually respects the trend. Now, and that is why if you look at this scenario, look at what happened. If you were to be buying blindly, following the concept that when price is at the level of 90, you should sell. Look at this, you sell, but price is still buying. So what is wrong? Because that is not the original direction of the trend. What you should have been waiting for is for price to pull back to this trend line here, and then let the indicator window pull back to the window here, so that price can start from here and the both of them can go hand in hand. So this is the best way you can incorporate your indicators together with your trend line, and you will have perfect and excellent result. You realize that if we are to connect this trend line, we can't bring the trend line this way, so let's hope that this trend line is this way. Okay, we have this trend line being connected. Now in this scenario, how do you trade? Remember what we shared previously, that there are times when the strength of price become much. Price will not be able to retest this original trend line that you have connected from the origin. So you will be treating it as a zone whereby you will need to get additional trend line confirmation such as this. Okay, now to mark this your new zone, so you need this additional trend line to mark all this recent zone. But even if price should break this recent trend line, that does not mean it has violated it. It is still a valid one. And in such scenario, you won't be expecting the CCI line to pull back all the way to the level of 90. Anything above the 50 level, it will begin to return back. So in that scenario, when you get a candlestick confirmation, you can as well find your entry. So that is just how perfect you can use this, and it works very well. In a ranging market, for instance, let's look at this. I believe this is a ranging market scenario because we have price retest here somehow, and then we have this retest. So in this particular order, what do we do? If you are trading support and resistance, this is a different scenario as well. But looking at what we are having here, yeah, so this is a typical support and resistance scenario. And then look at what price is doing. So price will test it here. Look at this. It came again. Look at this. Right? It came again. Look at this. And it plays out. Why this was playing out? This is a case of support and resistance. So this is not a trending scenario, and as such it keeps respecting it and confirming it. This is not the idea that is because the indicator is in an overbought zone or oversold zone. It is only working because this coincides with price action. Price don't obey indicators, it respects price action. And that is why even if price come all the way to this point, you are not just going to buy because your indicator is at the level of 20 and 10. You will only get in and buy not because of indicator. You are not looking at indicator. Indicator is not the first thing you are looking out for. Take note of that. The first thing you are looking out for is price action. Price came to a support zone, yes. Do I get an engulfing candlestick pattern? Yes. Then where is my indicator window? In this scenario, this is a divergence that we are having here. So that becomes a double confluence for you in order for you to make that powerful entry. Look at this one too. Is price at your support zone? Yes. Beautifully well. What are you? Do you have a candlestick pattern? Yes. This is a candlestick formation. And what do we have here? We have a divergence. So you see now, these are different confluences. That is only when you now consider your indicator window. So you are not doing any of these things in isolation. Look at this one. We have a pin bar candlestick pattern, a bearish pin bar, and then it was even a divergence. Look at this and this. So there is a divergence. So you can see that none of this functions in isolation. None of it, none of it, none of it, including this scenario. You see that? That is a divergence. And look at the candle, and then price take off from the level of support. So you are not trading in isolation. You are combining price action with your technical tool. You are combining price action with your technical tool. So this is the best way to take advantage of this, and I believe you have learned something new. If you are here to subscribe to this channel, please do not forget to give this video a like, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.